This morning on BRN, revisiting student loans in 2025. Joining me now to help break it all down, Betsy Mayotte is the president of the Institute of Student Loan Advisors. Betsy, always great to see you. Happy New Year. Thanks for joining us in the program this morning.
My pleasure.
And, we were talking about the Institute of Student Loan Advisors. You've added a new page to the site. Tell us about the PET page and how popular the PET page is with student loan borrowers.
So someone on the TISLA team asked a few months ago if we could add the TISLA pets to our employee page because they work almost as hard as we do. And so I said that we could. And boy, we should have done that ages ago because the borrowers that reach out to us and look at our webpage, it's a big hit with them.
So what type of pets? I mean, I'm assuming dogs, cats, but are there like snakes, geckos, chameleons? I mean, what types of pets did the TISLA folks have?
We're a dog heavy base. Of course, I have two cats. I think most people know Alice, the student loan cat, and I have Captain Jack Sparrow. But most of the other TISLA employees are mostly dog people.
Okay, well, that's interesting to know. There's probably some. I wonder if how that ties into student loans. Maybe it does. Maybe it doesn't. All right, Betsy. 2025. Last time we chatted, it's been a little bit of time. Give us the landscape right now as it stands with student loan borrowers and the outstanding amount of student loan debt.
Yeah, so we're still at about 1.6, I believe, trillion in student loan debt if you include federal and private student loans. And that represents around 40 million student loan borrowers.
Wow.
There were quite a few borrowers that did receive forgiveness or got a lot closer to forgiveness under the Biden administration, which was great. I think a lot of those programs, not all of them, are not something that we're ever going to see again. But that administration did make a lot of really beneficial long-term changes for borrowers that hopefully will make it a little easier for them to navigate their student loans.
So let's fast forward. You already mentioned, we've got a new administration. We're in kind of probably a different Department of Education, philosophy perhaps. What does this mean? So I think you already mentioned that maybe the student loan forgiveness won't continue, or will it? What does this mean for our student loan borrowers out there that are part of the 40 million with $1.6 trillion in debt?
Yeah, so I have a feeling. Now, let me just be clear. At this point, everything I say is speculation because my crystal ball is foggy, like most people's. But I think, so we sort of have two groups that we have to watch. We got to watch the administration itself, and what are they going to do? What are they going to focus on? And then we have to watch Congress. And I'm actually watching, as far as student loan borrowers go, I'm watching Congress a little more closely than I'm watching this upcoming administration. I mean, we know who the new Secretary of Education is going to be. It's most likely going to be Linda McMahon.
From the WWE.
That's right.
But to be fair, she was the president of the WWE, but also was the head of the Small Business Administration, I believe.
That's right. I was going to say that, a lot of, as far as all the potential new secretaries go of the various agencies, there's been a lot of flack about Ms. McMahon. People are saying, oh, she's not a teacher. Well, you know what? The Department of Education is not a school. I don't mind that she has experience running a business, not only her own business, but her work within the Small Business Administration. Candidly, I think the Department of Education needs someone who understands how to run a business. So I don't mind that so much. But we also need to look at who might be coming in as undersecretary and who's going to be in charge of the federal student aid portion of the Department of Education. And by the way, let's dip something in the bud right now. There's been a lot of talk about the Trump administration getting rid of the Department of Education. And people sort of freak out over that. What does that mean for student loans? Is half of people that go, oh, well, if they get rid of the Department of Education, all the loans will go away. No, that's not how that works. And then there's the other side that go, oh my goodness, if the Department of Education goes away, they're going to change all the terms of our loans and it's going to be terrible. And no, that's not how it works either. If they were to get rid of the Department of Ed, and that's a enormous if, they've been trying to do that since the Reagan administration. Um, all that would mean, as far as student loans go, is that another agency would be in charge of them, and that would likely be Treasury. The terms and conditions of the loans would not change a bit just because they change who the agency is. So I sort of want to nip that one right in the bud.
Yeah, that's really good. I was going to say, and I mean, it's good that you do that because, there's a lot of misinformation and stuff that gets thrown out there. And a lot of people just try to throw things against the wall to see what sticks. And look, the business that Miss McMahon built with her husband, Vince McMahon, that became a multi-billion-dollar wrestling company, entertainment company. I was a WWF fan at the time, so I know her, but I think a lot of people probably have to get to know her if they didn't know her as the Small Business Administration cabinet secretary. Anyway, Betsy, let's talk about. I interrupted you. I want you to finish your thought, but I also am interested in what we can do as borrowers. If we're student loan borrowers, what should we be thinking? Should we be thinking about stroking that check to restart our payments? What should we be thinking about?
Yeah, so most borrowers should be in repayment at this point unless they're stuck in that save forbearance limbo. The litigation around the SAVE program is still ongoing. Listen, I'm fairly certain SAVE is sunk. So anybody who's on anybody who's on the SAVE program should expect their payments to increase. How much they're going to increase remains to be seen. We need to see how this litigation plays out. My speculation is that the new administration will just drop their appeal on it and rewrite the SAVE program. Probably, from what we've seen over the past couple of weeks, it most likely will resemble the old repay program that it replaced. So if borrowers can look back to see what their payment used to be, that's probably a decent indication of what their new payment probably will be once the SAVE litigation nonsense is over. Everything else sort of is up for grabs. I mentioned that I'm watching Congress a little more closely as far as student loan implications than I am the administration. And I think seeing what's going to happen there is going to come sooner rather than later. We've heard that they want to put a big budget bill out there as soon as April or May. And they're sort of looking at the old CCRA that was introduced by the House last January. So if we look at that as a blueprint for student loans, I think we can look at that, a simplification of repayment plans, meaning there'll be less of them and they might be a little more expensive. We might see some um, lowering of how much people can borrow in the first place. I think we're definitely going to see some risk sharing for colleges. They might finally have some skin in the game. But to answer your question, what can borrowers do to prepare? Look at their budget, see how much they can afford to pay to prepare to perhaps be making a higher payment, and just sort of stay in tune with what's going on. So when and if changes happen, they're ready for them.
And they can certainly, your website, the TISLA website, you have all the news. I mean, they can certainly come here, but you have all the news um, going on, all the happenings that are going on. They can check your website on a regular basis.
Absolutely. The two websites I would recommend they bookmark are studentaid.gov, which is the Department of Ed's website, our website, freestudentloanadvice.org. I recommend you stay the heck away from TikTok. I can't keep up if TikTok's a thing now or not. Um, and the Facebook groups. There's a lot of the
Yeah,
rumor mills
speculation.
and the fear mongering are really going strong on TikTok and some of the other social media groups. So, stick with the sources. Again, studentaid.gov should be the one that's primarily bookmarked.
Yeah. Last question for you, Betsy, and I totally agree. It's not just student loans. It's pretty much every financial instrument. There's and you never know who is behind it and what their agenda is. That's the last thing I'll say about that. But last thing I want to ask about, Betsy, what about future student loan borrowers? I mean, kids are still going to go to college. Um, they're probably going to take some level of student loan if they don't have a 529 or a parent or parents that can pay or grandparents that can pay the total amount of money. What should they be thinking about before they take that student loan out, regardless of who's the Department of Ed secretary, regardless of what Congress does? What should they be thinking about?
I mean, the simplest way to put it is don't borrow more than you think you can afford to pay back in a reasonable amount of time. And I urge, but this is going to sound a little silly. Um, But I urge people when they're taking on student loans to not look at the big number, but calculate what that's going to translate into and for a monthly payment and for how long. And is that something that you have the appetite for? Um, and stay away from private loans as much as possible. Private loans are essentially credit cards that are harder to discharge in bankruptcy. There's very few, if any, lower payment options. The people I see that struggle the most are the ones that have significant amounts of private loan debt.
And their rate changes. It's flexible with what the Fed does, right? When the Fed changes rates,
That's right.
right? So it's not like the rate setting on a public loan, like a federal loan, right?
Right. Federal student loans have a fixed interest rate. Any loan made after 2006 has a fixed interest rate, but private loans absolutely have a variable rate. And I have a lot of people in my inbox right now that have 14 and 16 and 18% rates on their private loans right now.
That sounds like Betsy, that sounds like a credit card. And I wonder, and this is probably for a future show because we have to go, but I wonder if, the CFPB is looking at capping credit card rates. I wonder if student loans couldn't be next, at least in the private sector, the private student loans. Betsy, we're going to have to leave it there. Always great to see you. A wealth of knowledge coming out of that brain. So much experience. Betsy, great to see you. Thanks for joining us, and we look forward to having you back on the program again very soon.
Thank you.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.